I can hear you. I can hear you.
Okay, good. Sorry, me and Zoom have beef. We got a problem. I don't know what it is, but that's why I don't use Zoom. Um,
It's all good, man. It's all good. We're gonna take our time, make sure everything right.
okay, so first updates. So updates happen once a month, especially with my company. When the credit repair process, they release your official report once a month. The bureaus do. Now, different monitoring apps like Credit Karma may update daily, just the reports. But the credit bureaus will release a new report once a month. So that is when you should be able to see changes. So every month there should be changes, stuff removed, stuff added, and score changes. And if not, then I offer a money back guarantee.
No, that's awesome right there.
Yeah, because in the beginning, sometimes like the bureaus, they have delay tactics that they put in place. And this is why when people try to fix it themselves, they don't see results or they have a hard time getting results or they barely see results because they have delay tactics put in place that when they do respond or send out a letter, say the person may not get the letter, or even if they do get the letter, they don't know how to respond appropriately, or they are frustrated because by the time they get the letter, it's almost been 30 days and the bureaus are stating basically, we don't think you sent this. Give us a call. Let us know if this was you. We'll send you a copy of your credit report. But they say in the letter specifically that they're not going to do anything until basically they hear from you or get additional information. So that can be a barrier in the first month in the beginning. So that's why it's important to know what you're doing when you hit a roadblock like that because it's very frustrating.
So you saying the moment they join that first month, they should be planning on seeing something added, something removed, things together.
Some type of changes, yes, within 30 days.
Okay, great. And what was the second thing?
Oh, funding. Okay, so I'm gonna skip funding and go to the credit profile. So for your credit profile, it's broken down into different parts. The main thing that is going to make up the most percentage of your credit score is history. So that's why I tell people most of the time it is vital. In order to have good credit, you have to establish good credit history. And I have different credit building options that I make available for my clients, but they're for anyone. It doesn't matter. They don't even have to be a client, they're readily available. But the best way to start establishing that history is by building positive credit. And for example, one thing is student loans, and that's usually our oldest account just because we get them while we're so young. Most of the time, people get them while they're in their late teens, early 20s. And of course, we've seen all the changes that are going on with student loans. But one good thing about that account is it holds history, especially around late 20s, mid 30s. That's your oldest account. So it's carrying a lot of history. So when you have an old account, a car that you've had for 5 years, a credit card that you've had for like 3 years, anytime, even if it's reporting negatively, anytime that account is removed, is going to affect your score and it may cause it to fluctuate just because the history that is associated with that account is also removed. So it's important to at least try your best to keep them in good standing or to keep them open and active, or you to request to have them closed as a last resort than by just not paying. But okay, so history is about 35%. Your inquiries are only like 10% overall. Your new credit and credit mix take up some of that space that's left over. And yes, go ahead, baby. Sorry. And so new credit, credit mix, history, your inquiries, and like how many accounts, your revolving accounts, stuff that you make payments on every month. That's going to be like the overall makeup of your credit file. Um, late payments. Late payments can be detrimental, especially if they're recent. So the more recent a late payment is, the more of a negative effect it's going to have on your overall score. One late payment can affect your score and make it drop 40 to 50 points. Um, which is crazy because it can honestly, and a lot of times it's just a mistake. You just forget, or maybe you just needed an extra day. Like whatever the case may be, you got to keep in contact or figure out a way to get that extended, because that late payment can drop your score 40 to 50 points, especially if it's recent. And the remark that they put on there for the late payment on your reports, it's going to remain, like it stays on your report as long as that account stays on your report. So your payment history is very important. It stays on the report regardless of the status of the account itself. Funding options. So for funding, let's go over businesses. So funding for businesses is a little bit different from personal. What, baby? Hold on. I gotta be a mom real quick.
Oh, you're good. Take your time. Take your time. I hope everybody is putting down some questions that you might have. If you're thinking about jumping into the credit repair, go ahead and have you some questions. That way you can go ahead and get them answered before you get into it, while we already got it on the line. Robbie, I see you just jumped in. What's going on, man? How you feeling over there? Okay, you at work. Robbie done wrote inside the chat.
Okay, I'm back. Sorry.
Yeah, now you was talking about the business side of funding.
Yeah, so as far as business funding, is different from personal funding, just because, for one, the payment terms, they're more flexible, but depending on your score and your history, they may require daily payments, weekly payments, bi-weekly payments, or monthly payments. And a lot of that depends on if the lender is more revenue-based versus being score-based. And regardless of how many credit gurus or whatever you see and hear online, your personal credit is going to play a factor in how much funding you get for your business. If you're not a business that is found on Google, like Google verified, you don't have a website, you don't have an official business email, no Yahoo, Gmail, no free email, that doesn't count. An actual business number and an actual business address. It cannot be a personal address. Those are the main common reasons why you're going to get denied off gate, because they can look at that. They can see that if you're not on 411, if they cannot find your information and the information matches every database that they search through, if they can't find it and it doesn't match, they're not even going to continue with your application. So it's important to have the foundation set and laid appropriately, that your business is structured before you go and request funding. Also, a business bank account, it has to have your business name on the bank account. Because even if they are revenue based, they don't care about the score, they're going to want to see bank statements. They're going to want to verify that you can, in fact, pay this loan back. So when they look through your bank statements, if you are using that account like you're using it as a personal account, they're going to question it. They're going to want to know why, and it might be the reason you get denied. Because why do you have like 18 McDonald's, or all your out to eat, all your shopping, like you're using your business account as your personal account? And you can't do that. You should honestly just have your deposits going in. If you're going to pay yourself, you go to the bank, to the teller to pay yourself, or you do a withdrawal or a transfer from that account to your personal account. But do not use your business account as your personal account and then think you're going to turn in bank statements and they're not going to question it, because they will. That's another common reason why people get denied. And then, so say you have everything we talked about and they want to see if you have business credit, because again, business credit is different from personal credit. So they're going to go and look at, see if you have a DUNS number, see if your profile is on Dun & Bradstreet, see if you're registered with like the SAM website, depending on what your business is. They're going to look at your business code, like your NAICS code, if I didn't get the acronym mixed up. But that's basically saying like what level risk your business is associated with. So we all know my main thing is credit repair. My business name is New Level Enterprises. You cannot look at my business and tell what I do. And enterprises is a low risk industry. If I was to mention credit repair, I wouldn't be able to get anything because that is a very high risk industry. Finance is high risk. Trucking is high risk. Like there's just certain businesses that it's going to flag regardless. So that code that you have that is attached to your business. So when you come up with the name, don't put in what you actually do, like when hauling. Like no, it doesn't have to do that. You stick with enterprises, logistics. Stick with very broad very broad and generic names when it comes to your business. Especially if you're associated with one of the high risk industries, just because you don't want to run into issues when you go to get finance and also with your business insurance. Because if you go to get your business insured, which you should always protect yourself and your business. Then if you are in a high risk industry, you're probably going to have to pay more per policy than someone who's not. So your business credit, there's a lot of ways to build it. But the basic run over with business credit there are 4 tiers. Level 1, 2, 3, and 4. Your level 1, basically like your net 30 accounts, easier accounts. Level 2, equipment financing. Level 3, them high limit credit cards. And level 4 is funding. The higher your personal credit score is.
Levels back one more time?
Yeah. So like level 1 would be like your net 30 accounts. Level 2 would be like equipment financing. Some even like net 60, net 90-day accounts that you can get with like Home Depot and Lowe's. And then tier 3 is going to be more of the credit cards, especially those high limit credit cards, corporate cards that really don't come with the limit. And then your 4 is funding, like your business loans. So they're set up differently from personal credit. And the higher your personal credit score is, the easier it's going to be to get to the higher tiers in business credit. It's easier to fast track it if you have good personal credit, because again, I don't care what no one says. You need to have good personal credit in order to be able to establish and have good business credit. Okay, so that is business financing in a nutshell. And especially if you have a newer business, 2 years or less, and you're probably going to get denied. That's another one. You want to age your business. So even if you don't know for sure what you're going to do, pick a name, put an LLC on that name, get your EIN, it's free, and let it sit. If you don't know what you're doing or you haven't even started, you have this idea and you have a plan to put it in place, you still go ahead and get the paperwork on that name and that business, just so you can use it when it's time to, when you want to go get some money. And if you change the name, it's fine. You could even do a DBA and keep the same LLC if it's in the same area. Like you don't have to have like 25 LLCs. It's not necessary. Okay, so personal funding. It's mainly going to factor your credit and your debt to income. And I guess it depends on where you go, because of course the online lenders with business and personal are going to be more lenient as far as like what you can and can't get and what you qualify for. So you need good credit to get a good loan, or the interest rates are going to be extremely high. And that's what we call predatory lending. The title loan companies out here, predatory lending. The One Main Financial, Security Finance, those are literally predatory lending, because the interest rate has you paying back more than 50% of the loan, if not close to 100% of the loan. So you want to have good credit. So you can go into your bank, ideally a credit union, bank with a credit union. They work for you. They're not a private owned bank or institution. You need a credit union. Go get a loan from a credit union. Even some of them call them pledge loans, paycheck loans. Like they make them available to where you can start out in smaller increments and build from there. Just don't mess up with them, because you want to build that relationship. And honestly, Those are the best type of loans to get. They're going to give you the lowest rates, monthly payments. You're not going to have to do bi-weekly or weekly payments. And the more that you build your relationship, a positive relationship with your bank and payment history, the more they're going to want to give you. That's what they do. They want to give money away. You just have to give them a reason to give it to you. So get out of the car and stop going through drive-through and go in and let them see your face. That's one of the simplest ways to build a relationship with them people in the bank. Once a week, instead of going to the ATM, the drive-up ATM, or going through the drive-through, get out the car, walk in, introduce yourself. Go ask the people that do auto loans what the qualifications are. Go ask the mortgage lenders what the qualifications are. Tell them what your name is and what you do for a living and what your goal is with that bank. The more they can put a face with the name, the higher your chances are, because they put your information in a computer and that computer will generate a response, but the person behind the computer has more of a say-so than the computer itself. So it's very important to start building relationships. So if that's out of your comfort zone or you just don't like it, it doesn't matter. You got to do it.
Right. Well, you spit a lot of game real fast. I'll tell you that.
I did.
What we're gonna do is we're gonna open up the Q&A to the mastermind. All right, let's start it off with if you got a question right now, go ahead and unmute yourself, and we'll go ahead and let you ask your question.
I have a question.
All right, Rich, go hit it.
All right, so if I read my dispute in the mail, what exactly is it telling me? I read it and everything, but it's giving me like a legend that tells me if it's past due or creditor received deed, current terms met. It has different things on it here. Let me bring up my okay, hold on 1 second. One second.
Big Sean, not the rapper.
You hear me?
Aren't you my client?
Yes, I am.
Yeah, so all you have to do, honestly, is just take a picture and send it to me.
Okay.
Because they will send you a lot of fluff. They will waste trees and send you a 20-page packet every month.
So I don't have to send anything in. Oh.
No, I do that. I handle it. That's my job.
Yeah.
So all you got to do is just send me, if they are requesting additional information, if they are wanting anything additional, if they're requesting anything, then yes, definitely send it to me. But honestly, they're going to send you your credit report every month, maybe even more than once a month. If they get to where they're starting to question either your identity or anything about a certain account where they're requesting more information from a creditor or the credit bureau, you can take a screenshot and send it to me in a text message or to an email or upload it to your client portal, because honestly, it's a bunch of fluff and a bunch of words that don't really mean anything. Because the main thing that I'm going to look at when I scroll through them pages is seeing what's confirmed or what's validated and what's deleted. Those are the highlights. The rest really doesn't matter.
Heard that. I appreciate it.
You're welcome.
And Mandisa, I'm gonna throw you on mute when people get to talking, so it don't go back and forth.
Okay.
And whenever you're ready to talk, just take a finger off.
Okay.
All right. Who else got a question?
I have a question.
What's going on, Danielle?
Hey there. So my question is on business credit, is Equifax a big deal? Because my Paydex is good, my Experian is good, but my Equifax is kind of very weak. And I may have like 3 trade lines, but is that anything I need to do for that? Or is that important when trying to get funding?
So your Equifax does matter. Your Paydex is the big hitter. that I would be concerned about. Your Equifax doesn't matter. What is the score currently? Does it tell you the score?
I was a NAV, but I don't have NAV anymore. So I
Okay.
think it's reading like a D.
Yeah, I would get that up because it's reporting low either because like a late payment with one of the trade lines or accounts. And you can contact them and ask them exactly what the issue is, but I would get that higher. You want it to be at least a B. And when you go into NAB, you can use the business boost option. I know it's $40 a month, but that will add a positive trade line reporting every month and help get those scores up because they do report to Equifax business and Experian
Okay.
business.
All right. Because I carry a high balance on that. So I'm thinking, I'm not sure if that might cause it to throw it out of whack because I do rehabbing. So I carry it until I sell that home and then I pay it off. But I just didn't see it rebound yet.
If it doesn't rebound within, like, I'd give it maybe another 30 days after you pay some stuff down, then I would move forward with adding another trade line and just something that is going to be in good standing. And just pull your report, the specific one, where it's not going to give you the letter. You want to see the actual number instead of the letter. So even if you just do it for 1 month where you can see the actual number and then contact whoever's on that report reporting that.
Okay. Thank you.
You're welcome.
Great question. Danielle. All right. Anybody else got some questions on here today?
You just want to be in the camera.
So everybody, everything about credit.
Yo.
What's going on, Marquise?
I had a question. I kind of missed it. I was moving around, but about the student loans. So you were saying it's best to keep the student loans on there, or can they be taken off?
Please turn my light back on. Go sit down. Okay. All right. Thank you. Love you. Bye. So with student loans, I can remove them. I work on removing them with my clients. I work on removal of anything that's affecting negatively. I'm working on getting it off. But while they're on there, you want to set up some type of payment plan to where that is not going to affect you if you're not making your payments. Because I think October was the first official month they went into, they lifted the forbearance or whatever the government had it in. So in the emails I sent it out like 5 times. It has the link. It's for income driven repayment plan. And if you can fill out that information on that application, it'll ask you to attach either pay stubs or your tax return, and they will base your payment off of whatever your income is. So of course, the goal is to get it as low as possible. So you turn in the documents, fill out the application, get your payment, and they will, when they receive your full application, they will put a hold on your payments until your application is processed, because it might take them, don't do that, please. It might take them 30 to 60 days to thoroughly go through your application and get back to you with the payment amount. So when they do, they will send you a letter and let you know what your expected payment is. And as long as you make that payment every single month, they're forgiven after 20 years, which, yes, it is a long time, but you have to do the application annually. You have to renew it every year. And the goal is to get your payments as low as we can, because like I said, that's your oldest account in most cases. That's a very old account. So you want to keep it in good standing. And honestly, if it's not hurting you, you might even just want to keep it on your report, because they changed, like with getting a house, they used to calculate in the DTI the actual payment that they had in their calculation, like 0.1% or 1% of the entire loan amount. It was like $30,000. But now they have to take, if you're on an IDR plan, they have to take whatever the payment plan is that you have with the student loan. So it makes it easier and to get it to have them not affect your DTI when you're applying for a mortgage. Sorry, y'all. My 5-year-old's in here. She's being a menace.
It's all good. Nice. Good question, Marquis. Good question. Anybody else in here got questions? We got a question from Robbie that says, do you know how a first-time home buyers program does when they check your credit?
Do you know how first-time home buyer program does when they check your credit? What do you mean? Check. They just pull a credit report, the first-time home buyers. I
And
don't.
Robbie, if you can, man, try to get on the try to unmute yourself and let's clarify that question.
Because there's different grants available for first-time home buyers. There's a lot of different programs for first-time home buyers, but all mortgage lenders, when they pull your credit report, they're going to pull your FICO score, like your FICO 8, and they're going off your middle mortgage score. Your mortgage scores are different from your credit scores, which is BS in my opinion, because why is there so many? But say you have a 610, a 620, and a 630, they're basing it off of the 620, and they're going to base your their decision off your DTI, your income, and your credit. So that's why credit repair is important.
Check out that question, Taquan. I know he's talk right now.
For personal credit, is it good to get a credit union and get a loan from them? Yes. Yes, that is ideal. Use a credit union for everything. Like I have 2 credit unions. With one of them, I have a loan, a credit card, and 2 cars. And a loan, a credit card, and 2 cars. And the other one, I have 2 credit cards and a loan with. Like they're going to give you the money as long as you prove that you can pay it back and you start building your relationship with them. Use them. What does good credit score do when you're applying or using the first-time home buyers program? Is there any benefit? Yes. So when you have good credit, you're going to get the best rates. And right now, your mortgage rates are sitting at 7 to 8. 6 right now is good. And the market is going to fluctuate. And don't wait. If you can buy now, buy. You date the rate and marry the mortgage. If the price, if the rates drop, you can always refinance. And when you refinance, you get the percent. Okay, the Smart Credit app. I'm listening. Marquise.
Hey, on the Smart Credit app, I mean, I was going through it, seeing everything that's on there, like the score booster, building your credit and stuff. But I was like, dang, it's telling me, click this to boost. I want to do. Am I supposed to touch any of that stuff, or you supposed to be doing that? Oh, I can't hear you. Hold on.
You don't have to, because anytime you do that score boost, like they're going to want to charge you something extra. It's not necessary. Because honestly, what they're going to do is just report something like a good payment or something. Like I don't trust it. You don't need to do that. It's unnecessary.
Okay, so just let you control all of that. All right.
I just received some emails from Experian, Equifax, and TransUnion. What are those about? I don't know. You can forward them to me. I'll send you my email address to forward them, because without me seeing them, I don't know.
Okay, anybody else got any questions in here tonight? Let's go. Y'all do a good job.
Wait, what are you doing? Get up.
So, Danielle, Marquise, Shauna, Robbie. Steve, you got any questions for Mandisa while we on the phone? I mean, while we on here?
Well,
Got any questions that maybe you want to text?
say it again.
Yeah, you go ahead.
I was just trying to do something about that echo. Still there?
Yeah, let's do it now. I had to mute her.
Oh, okay. So, Mandisa, how are you? I guess with the mastermind, I know you have credit clients, and we're on this journey to try to improve ourselves with our credit, with our finances. And you said 2 years. So if a person is just starting with this process, starting a business and all of that, we're looking at that, I guess that 2-year timeline in order to get your business to a point to where we can get funded. Am I making?
You want to skip over the 2-year wait period?
Well, I mean, yeah.
Okay, that's possible. Then I would
Okay.
introduce you to shelf courts. They're not illegal, but they're not ethical. So do with that as you wish. But that a shelf corp is a business that has literally been sitting on the shelf. It has the paperwork associated with the business. It already comes with the name. It comes with whatever documents, and they are expensive. And the older they are, the more expensive they are. You could buy a shelf corp, file the paperwork to change the name in a state out west, especially like Delaware, Wyoming, where they do anonymous LLCs, and then you could go apply for funding.
Okay.
Do your own research.
Yes.
Great question, Steve. Great question.
Turn it down now.
And I'll text you to email you the other questions.
Okay.
Thank you.
All right, guys. Everybody get to 8 o'clock. Just wanted to see if anybody got any more questions for Mandisa before we wrap it up today. All right, you guys are credit gurus. I need y'all to dig deep. Think about if y'all got any questions. Hit your accountability coach with any questions that you might have, any concerns. She left her email right there. If you guys want to, go ahead and screenshot that. Go ahead and copy that. Maybe you can shoot her an email if you got any more questions that pop into your head after this Zoom. And once again, I appreciate every single one of y'all being in here tonight. Let's get moving, man. Let's get moving forward. If you know your credit not good, go ahead and jump into the program. If you haven't jumped into the program yet, go ahead and get in there. Don't waste no time. You'll be sitting here waiting all day, and then you will never get your credit right. So we don't want that. We want everybody in the community to get their credit right, and then start being able to work their way towards getting access to funding. All right. So yeah, with that being said, we're gonna go ahead and lock it up, man. It's 8 o'clock. Mandisa, I appreciate your time. I know you just got out that gym. I appreciate you so much. We got more people coming your way this week. I know we got Saquon said he was jumping in. I believe Brittany said she was gonna jump in. If she haven't, I'm not sure if she's on the Zoom. She probably ran into some bad signal. But if we got any more questions, they'll be hitting you, or jump into that consultation link that she gave you. And Robbie, Robbie, any more questions you got, just shoot it to her in the email. You got her number, you locked in. All right, so with that being said, everybody go get you something good to eat tonight. And man, y'all take it easy, man. Once again, thank y'all for being in the mastermind. Mandisa, thank you for your time. And thank you everybody who asked some good questions tonight. I appreciate y'all.
Thank y'all. Y'all have a good night.
Y'all have a good night.